Hey guys, this is Mr. Oxy. I'm coming at you from, well, I shouldn't say that because someone complained. I should say I am broadcasting live from Palm Beach in Florida. It is Thursday. It is May the 13th. And what I'm going to do today is actually something that is probably going to be quite boring. So, sorry if this is going to disappoint you, but I'm going to dive into the 10Q for Occidental Petroleum for the quarter. If you've never gone through a 10Q before, it's not the most exciting stuff that you could possibly read, but if you're invested in a corporation, you probably should take the time, sometime, to look at the 10Q, maybe the 10K, which is the annual filing, Q being for the quarter. The bad news is it's 52 pages long. The good news is I've already gone through it. The other good news is what I did was within the 10Q is I highlighted many of the most pertinent sections, and that means I can actually kind of gloss through it and just scroll like crazy and go as quickly as I possibly can so that I don't lose you all, and share the sort of highlights reel of Occidental Petroleum's 10Q SEC forum with you. So it's going to be a highlights reel. So what I've done is I've organized myself a cup of coffee. Actually, it's a really small cup. It's an espresso. Cheers. And I am going to open this document, and I promise you I will try to go through it as quickly as I can without boring you to tears to the best of my ability. We'll see how we do. If you've never seen a Form 10Q before, this is what it looks like. As I said, I'm going to scroll, so I'm going to I'm going to just keep going until I find some of the sections that I highlighted. This is the table of contents for the entire form. As I said, it's 52 pages long. You can see that up there at the top of the screen. So the first pause I'm going to make here is on the financial information. This is the consolidated balance sheet as of March 31st, 2021. Right, so obviously we're already in mid-May, so this is already a quarter and a half out of date, but this is the best we've got, and this is all we can work with until they report the next quarter, which is going to be in about 15 years from now. So let's look at the balance sheet, and we look at the highlights that I've highlighted for you, sort of in yellowish. Cash and cash equivalents, approximately 2.3 billion. Last quarter it was approximately 2 billion. Trade receivables, this is money owed to Occidental Petroleum by customers, approximately 3 billion. It's almost $1 billion up from last quarter. Total current assets, approximately $10 billion. What are current assets? So obviously you can see underneath current assets what current assets are, but the definition of current, what is current in terms of the definition of current assets. I'm going to get back to that one in just a minute. Total assets for the corporation, about $80 billion. You can see it's slightly down by about $700 million from the previous quarter. Then we look at the liabilities. So the first one we looked at was the assets. In a balance sheet, your assets have to equal your liabilities plus your owner's equity. So now we look at the liabilities and we see their accounts payable is approximately 3.4 billion. So their accounts payable is approximately the same as their accounts receivable. So it's a bit of a wash. As these accounts receivables come in, they kind of pay the accounts payables that are due. In terms of current liabilities, what is current? We're going to define that for you in just a minute. Long-term debt, sometimes referred to by Wall Street as Occidental's wall of debt. $35.5 billion, which they stated quite a number of times during the recent earnings call. They want to get down to approximately 25 billion. So they're going to lob $10 billion off the long-term debt, which will also improve their credit rating if they succeed in doing that. I think they probably have a good plan in hand, otherwise I wouldn't have said that. And then you can see stockholders' equity. Stockholders' equity right now is at 18.3 billion. One thing that you can do as a little bit of simple math is you can say the total stockholders' equity is 18 billion. There are approximately 900 million shares outstanding, just to make it a round number, and 18 billion divided by 900 million shares is $20 per share. So some people will say the fair value of the share right now based on the balance sheet is $20. Therefore, if Occidental is trading at 24, 25 bucks, like it is currently, Occidental, by the way, on my speculative portfolio, is my worst performing stock. So if I sound like I'm happy, Mr. Oxy, you are just being fooled. But anyway, it's a quick math, right? So the stockholder equity portion is 18.3 billion divided by the shares outstanding is about $20 per share, approximately. Now we look at the consolidated statement from operations. And the first thing we're going to look at here is revenue. Net sales are above what the analysts' expectations were, which was 4.9 billion. They came in at about 5.3 billion, but it's more than $1 billion down from the previous quarter. And then here you go into these gray areas that I speak about frequently when I talk about GAAP and the way in which we account for certain numbers and all these other crazy things that we can do from an accounting point of view. So depreciation, depletion, amortization, asset impairments, and other charges. 2 and a bit billion. Look at the previous quarter. It was 2.3 on depreciation, depletion, and amortization, and then asset impairments added another 1.8 billion. So a huge difference here because this is over 4 billion, and this is only slightly above 2. One of the reasons why it was a better quarter. And look at that, we're already on page 6. And by the way, I'm not going to go all the way to page 52 because the last few pages of the 10Q basically describes their performance share plans and total shareholder returns and things like that, which we're not going to go into in this particular video because I don't want you to fall asleep. Pension and post-retirement gains and losses, 52 million. How do you make a profit on your pension and post-retirement category? Well, there's a little footnote here. Net of tax expense of 15 million and tax benefit of 31 million for the 3 months ended March 31, 2021 and 2020, respectively. So last quarter, a loss of 111 million. This quarter, a gain of 52. Net loss. So if you've been following Oxy, you'll know it's $146 million compared to last quarter's 2 billion. I said I was going to go quickly, guys. Cash dividends paid on common and preferred stock, 211 million. We know 200 of that 211 million went to Uncle Warren. I did say it's a small cup of coffee, right? This is a tiny espresso. It's not going to last me the whole video, but here we go. Some more. The consolidated condensed statements of equity. I'm not going to go into this one in detail. You can see the breakdown in terms of the equity here, the dividends paid on common stock of a penny a share, etc. As of March 31st, 2021, there's your equity of 18.3 billion that I talked about a little bit earlier. All right, I'm on page 9. These are the notes, and this is where it gets really interesting because as I've said before in several other videos, the meat on the bone is actually the Q&A at the end of the earnings call and the notes to the financial statement because this is where you get the good stuff. So let's take a look at some of these, right? And again, I'm going to go as quickly as I can. Cash equivalent. Occidental considers all highly liquid investments with a maturity date of 3 months or less when purchased to be cash equivalents or restricted cash. Remember earlier on when I looked at the balance sheet, I said what exactly is current? What is the definition? So there it is, maturity of 3 months or less. That's current. Restricted cash and restricted cash equivalents. 183 million. What is that? Firstly, it's not material because the number is too small. Secondly, restricted cash would be, for instance, money that's been set aside for a particular purpose. It could be for tax, it could be for pension obligations and things like that. So here we go. Total restricted cash and restricted cash equivalents are primarily associated with international joint ventures, a benefit trust associated with the acquisition of Anadarko Petroleum Corporation, and judicially controlled account related to a Brazilian tax dispute. What are these things? We'll find out in a second. That's the end of my espresso, and I'm only on page 10. West investment. In March 2021, Occidental sold 11.5 million limited partner units of Western Midstream Partners for proceeds of approximately $200 million. That's a nice deal, right? They generated $200 million while West was going up, 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 which means effectively it's not even a wash. They cashed out $200 million and their total shareholding of West is worth more than what it was before they cashed out $200 million. And it gives them $200 million to pay Warren Buffett in cash. As of March 31st, Occidental owned all of the 2% non-voting general partner interest and 49.1% of the limited partner units in West on a combined basis with its 2% non-voting limited partner interest. West operating, a West subsidiary, Occidental's total effective economic interest in West and its subsidiaries was 51.2%. Occidental has stated before that they'd like to keep their shareholding of West to below 50%. Which was one of the reasons why they said they cashed out 200 million. I think they cashed out 200 million just to pay Uncle Warren. Discontinued operations. What are these things? Occidental is continuing to actively market its Ghana assets. They want to get rid of the Ghana assets. The results of the operation in Ghana, an after-tax loss of $42 million for the 3 months ended March 31, 2021, are presented as discontinued operations. The amounts related to the Ghana assets, which are approximately 1.2 billion and 1.4 billion, are related to property, plant, and equipment net as of March 31 and December 31, 2020, respectively. So not a lot of downtick there in terms of 1.2 billion from 1.4 billion, but there is a differential quarter over quarter. Based on what? Who knows? Let's see what it's worth when they actually sell it. And hopefully we won't be stuck with a sale year of, let's say, $1 billion and an impairment charge of 2 or 4 million on the other side. Occidental recorded a $403 million after-tax loss contingency in discontinued operations associated with its former operations in Ecuador. See note number 8, lawsuits, claims, commitments, and contingencies. It is coming up soon. If you want to know about the lawsuits, like Alexei from Moscow, stick with me. I'm getting there in just a second or two. Divestitures. Occidental completed the sale of certain non-operated assets in the DJ Basin for net cash proceeds of approximately $280 million. The difference in the assets' book value and adjusted purchase price was treated as a recovery of cost and normal retirement, which resulted in no gain or loss being recognized. So it's a wash. This is one of those examples, guys, where you say, what is the value of the asset on the balance sheet? I've used the example before of saying, what is the value of your home? And you say, my home is worth $100,000. I say, based on what? And you say, based on all the sales around me in my particular area where I live. Then when you try and sell your house, you sell it for $80,000, so you have a $20,000 impairment charge because you thought your house was worth $100,000. Algeria. In April 2020, last year in April, Occidental decided to continue to operate within Algeria. As a result, beginning the second quarter of 2020, the Algerian operations were no longer classified as held for sale or within discontinued operations. It's a balance sheet entry there. It doesn't affect cash. Revenue from customers is recognized when obligations under the terms of a contract with our customers are satisfied. This generally occurs with the delivery of oil, natural gas liquids, gas, chemicals, etc. This is an example of when the sale is recognized compared with when the revenue is actually received. There's a gap there, and gap is kind of a forgivable pun here because I'm talking about GAAP accounting, GAAP, where I used the example before of Boeing, who gets an order for 100 planes, and the last plane's only going to be delivered in 2035. When do you recognize the revenue? Maybe today, because you want to make your quarter look good. When do you actually get the money? Well, over the next 15 years, or whatever the case might be. And we're on page 12. This aggregation of revenue from contracts with customers, the table below presents Occidental's revenue from customers by segment, product, and geographical area. This is the $3 billion that I mentioned earlier. And this, if you take the breakdown here, you can sort of see exactly where Occidental's revenue is coming from. So if you look at the $3 billion in revenue on oil, which is by far the largest contributor, but then you look at the total consolidated revenue of over $5 billion, you realize that oil actually contributes approximately 60% of Occidental's revenue, which means that the price of WTI, whatever it might be, does not dictate whether Oxy is going to have a good quarter or not. A higher WTI price is beneficial because it impacts 60% of Occidental's revenue, but it does not impact the rest. Fortunately for Oxy, they have a $1 billion business, which is chemicals, and that one just prints money as if it's going out of fashion. You guys still with me? Still awake? Let's look at the inventories. Finished goods primarily represents oil, which is carried at the lower of weighted average cost of net realizable value, and caustic soda and chlorine, which are valued under the last in, first out, or LIFO method. Last in, first out is an interesting way to value that particular inventory for caustic soda and chlorine, because the last price might be the highest price or it could be the lowest price. So that's a little bit of a gray area too. The value of cash flow hedges, we're talking about derivatives here. So note number 5, derivatives. Cash flow hedges was insignificant at March 31 and December 31, 2020. So there's nothing to report. When there's nothing to report, that in a way is probably a good thing. How about the collars on oil call options? And oil call options, Occidental's natural gas two-way collar derivative instrument settled in 2021. It's coming up soon, and were entered into to manage its near-term exposure to cash flow variability from natural gas price risk. People who deal internationally frequently use collars and hedges and options and things like that. So as an importer and exporter of products, for instance, I might consider buying forward cover in order to protect myself against the risk of an exchange rate in currencies that might not be favorable to me. So in order to protect my margins, I might say, okay, you know what, I'm going to buy some forward cover. So if the US dollar drops more than what I had anticipated it to drop or something like that, I have some forward cover in order to protect my position. Moving on, interest rate swaps. Occidental's interest rate swap contracts lock in a fixed interest rate in exchange for floating interest rate indexed to the 3-month London interbank offered rate, LIBOR, throughout the reference period. It's good to lock in the interest rates because it takes away the uncertainty in terms of what the interest rates is going to be. These things cost money, so it's an expense. And if you want to buy forward cover, or if you want to buy collars and hedges and a variety of different tools as derivatives to protect your positions, you need to be willing to also fork out a bit of cash in order to do that. Fair value instruments. Occidental has categorized its assets and liabilities that are measured at fair value in a 3-level fair value hierarchy based on the inputs to the valuation techniques. Level 1, using quoted prices in active markets for the assets or liabilities. Level 2, using observable inputs other than quoted prices for the assets or liabilities. And level 3, using unobservable inputs. This is one of those gray areas in accounting. I kind of touched on it when I said, how much is your house worth? It's worth $100,000. Then you sell it for $80,000. Maybe sell it for $150,000. That'd be level 3 because it's unobservable inputs. No one's made an offer to buy your house, so you actually have no idea what it's worth, because the real value of any asset is what a willing buyer and a willing seller are prepared to agree on in order to make the transaction, period. Long-term debt. So this is a breakdown of the long-term debt. The total borrowings at face value, nearly halfway through, guys, 35 billion. Not much change from December 31. As in the first quarter of 2021, Occidental had repaid almost $200 million of debt upon maturity. They're about to settle quite a big chunk of debt, because they at least twice in the earnings call said that their target is 2 to 3 billion, and they are quite confident that they're going to knock off $2 billion in long-term debt by probably the end of the next quarter. So this quarter that we're in right now, the fair value of the debt, the estimated fair value of Occidental's debt as of March 31 and December 31 respectively, substantially all of which was classified as level 1, was approximately $34.5 and $33.8 billion respectively. So not a big change or difference. There's only $1 billion difference between this 34.5 at level 1 and the actual value of 35. So $500 million, not a lot. Lawsuits. So Alexei, who wrote to me from Russia, did ask me about this one. He said, can you go into this one a little bit more in detail? So the only place where you can actually find this information and get a clear answer is in this particular instance, the 10Q filing. And it says it's probable that a liability has been incurred and the liability can reasonably be estimated. In 2016, Occidental received payments from the Republic of Ecuador of about $1 billion pursuant to November 2015 arbitration award for Ecuador's 2006 expropriation of Occidental's participation contract for Block 15. So expropriation means that Ecuador took some land and in exchange, Oxy received a payment of $1 billion. The award amount represented a recovery of 60% of the value, basically the book value. Arguably, then you could say, well, it was worth $1 billion and not whatever the value was before they started splitting it up. Andes Petroleum Ecuador filed a demand for arbitration, claiming it is entitled to 40% share of the judgment amount obtained by Occidental. Occidental contends that Andes is not entitled to any of these amounts paid under the 2015 arbitration award because Occidental's recovery was limited to Occidental's own 60% economic interest in the block. So there's a bit of litigation going on here and the guys are fighting with one another. What about other litigation? Because there are numerous pending cases and any large corporation has multiple lawsuits and litigation pending at any given time. So in this particular instance, Oxy is not unique at all. How about the rest? So August 2019, Sanchez Energy, it's related to agreements with Anadarko. Then alleged misstatements. This is Sanchez. Alleged misstatements in the securities filings, including the registration statement filed in connection with the acquisition of Anadarko and Occidental's related issuance of common stock and debt securities offerings, which took place in August 2019. These matters will not, individually or in aggregate, have a material adverse effect on Occidental's consolidated balance sheets, condensed balance sheets. So Occidental's basically saying, yeah, this stuff is going on, it's not material. Tax matters, significant audit matters in international jurisdictions have been resolved through 2010. In other words, we are 11 years in arrears, and this is not unusual either for a large corporation. The IRS is a government institution, and although I love them very, very much, they are fabulously inefficient when it comes to resolving matters related to tax and large corporations expeditiously and fast. For Legacy Anadarko, its tax years through 2014 and tax year 2016. There's some information here about Anadarko. Anadarko received an $881 million tentative refund. So there's stuff related to Anadarko, which is a bit old. Environmental liabilities and expenditures may retroactively apply, and regardless of fault, right? This is one of those gray areas where the government is fabulously overreaching on a regular basis and says you are now responsible for some kind of a spill that happened years ago, but because you acquired Anadarko, for example, it's your responsibility to clean it up. I'm not arguing about that. It's just that these things happen after the fact and you can't really control it. Retirement plans. Occidental has various defined benefit plans. Almost no one on earth has defined benefit plans anymore. Most benefit plans today are contribution plans. So they're not DB, defined benefit pension plans. They are DC plans, which are defined contribution plans. The difference between the two is that under a defined benefit plan, you might have earned, let's say, $1,000, and the defined benefit is a defined benefit of, let's say, 40% of your last earnings. Therefore, for the rest of your life, Occidental has to pay you, if it's 40%, $400 per month as a defined benefit. In addition to that, they also have a whole variety of other expenses like medical expenses and things like that that are attached to defined benefit plans, which is one of the reasons why these plans no longer really exist. Most pension plans today are defined contribution plans, where your contributions to the plan define what you're going to get when you one day retire, whatever that means to you. Earnings per share, so the weighted average number of basic shares, 933 million. So we know, as I said earlier on when we talked about the shareholders' equity, which is about 18.3 billion, divided by about 900 million shares, means the fair value, according to some people, would be about $20 per share. So currently we are sort of about 20 to 25% above that value, if that is a benchmark that you follow. Management's discussion and analysis of financial condition and risk of operations. This is a good document to view if you don't read the entire 10Q because it's boring and it puts you to sleep. You can always look at the MD&A, Management's Discussion and Analysis. Let's go down this one a little bit. I'm going to skip all the opening statements, current business outlook. So now we get into the meat on the bone in terms of where management says the company is going, and this is in the MD&A. Occidental's operations, financial condition, cash flow, and levels of expenditures are highly dependent on oil prices. We know that, right? And to a lesser extent, NGL and natural gas prices. Why? Largely because they're highly dependent because 60% of their revenue is derived from oil. Priorities. Occidental's operational priorities for 2021 are intended to maximize cash flow. So in case any analyst or anyone, any talking head on TV, including me, tries to tell you what Occidental's priorities are, this is MD&A priorities. Intended to maximize cash flow by sustaining production in line with its 2024 quarter rate with an annualized $2.9 billion capital budget and maintaining a majority of the cost savings achieved in 2020. During the first quarter of 2021, Occidental generated cash flow from continuing operations of $800 million, incurred capital expenditures of only $579 million, and generated cash proceeds from the sale of equity investments and other assets net of $496 million. Occidental is targeting additional asset sales expected to be announced later in 2021, which might be as soon as the end of Q2. Occidental intends to use excess cash flow generated in 2021, coupled with asset sale proceeds, to strengthen its balance sheet by reducing debt and other financial obligations. So the next time you ask me, Mr. Oxy, when will Occidental reinstate the dividend? You need to go back to this particular line and say their priority is to strengthen their balance sheet, reduce their debt and other financial obligations. Liability. Occidental entered 2021 with reduced near-term debt maturity exposure. Occidental has remaining near-term debt maturities of approximately $224 million in 2021. That's very little. $2.1 billion in 2022. That's a little bit more, but nothing at the current prices. And 0.9%, almost $1 billion in 2023. Easily achievable, even through free cash flow. No problem settling that payment at all when it becomes due. In addition, Occidental's zero coupon senior notes, which are due 2036, also referred to as zero coupons, can be put to Occidental in October of each year. The zero coupons can next be put to Occidental in October 2021, which, if put in whole, would require a payment of approximately $1 billion at such date. So this is a potential date that might require them to pay out approximately $1 billion if those senior notes or zero coupons are put. Occidental currently has the ability to meet this obligation and may use available capacity under the revolving credit facility to satisfy the put, should it be exercised. So in other words, if they don't have enough cash, they can use the revolving credit facility, which is about $5 billion, and it's currently undrawn and available. Interest rate swaps with notional value of $725 million and a fair value of $648 million. Rob Peterson talked about this during the earnings call. He talked about the swaps. I'm not going to go into detail on that one. Occidental had approximately $2.3 billion of cash and cash equivalents on hand as of the date of this filing. $5 billion of borrowing capacity under its rolling credit facility matures in 2023. Additionally, Occidental has up to $400 million of capacity subject to monthly redetermination under its receivables securitization facility, which matures in 2022. The company has fistfuls of cash. They're okay to cover any debt right up to 2023 as of today. Debt ratings. A downgrade in the credit ratings could impact Occidental's ability to access capital and increase its cost of capital. Occidental's current debt ratings are non-investment grade. Occidental may be requested, and in some cases required, to provide collateral in the form of cash, letters of credit, surety bonds, or other acceptable support as financial assurance. Those things all cost money. So if you can improve your investment grade, you can get away from the cost of having to pay for things like letters of credit. The impact of COVID-19. Occidental has not incurred any significant disruptions to its day-to-day operations as a result of any workplace restrictions related to the COVID-19 pandemic to date. Quite impressive, huh? Operations. Nearly done, guys. I'm already on page 26 and I'm not going to 52, so don't worry. The increase in income from continuing operations for the 3 months ended March 31 compared to the same period was primarily related to higher crude oil prices, higher marketing margins resulting from the timing impact of crude export sales, and improved prices across most of the products in the chemical segment. Asset impairments, that gray area again, and other charges for the first 3 months ended March 31st were associated with non-core domestic undeveloped leases that either expired during the first quarter of 2021 or were set to expire in the near term, where Occidental had no plans to pursue exploration activities. Income or loss from equity investments, primarily due to a 2020 loss from an equity investment due to West's write-off of its goodwill. Goodwill in itself is an asset which is a little bit gray in terms of its value. All right, let's skip a couple of pages here. And here's all these things. I'm not going to go into this one either because it's repetitive. Impairments, derivative gains and losses, asset sales gains, impairments, derivative gains. Those are all the things that accountants, those bean counters, they love to play with. Skip a few more pages here just to help us get through this quicker. Here you can see the average realized prices. In the United States, $56.18 per barrel. That was the average. So in a few videos, I said about $60. It wasn't 60, it was about 56, but we came close. Average index prices for the quarter was $57.84 for WTI, $61.10 for Brent, and $2.72 for NYMEX gas. Let's see what else I got. Liquidity. Occidental had $2.3 billion in cash and cash equivalents. Operating cash flow from continuing operations was $0.8 billion. Environmental lawsuits, claims, I talked about that already, so we're not going to go there. Here's an interesting one from the 10Q. The maximum number of shares that may yet be purchased under the plans or programs. Unregistered sales and equity securities and the use of purchase proceeds, 44,206,787, footnote B, represented the total number of shares remaining at March 31, 2021 under Occidental's share repurchase program of 185 million shares. Occidental may, under their current plan, buy back almost 44 million shares. If they have a lot of cash, in addition to paying off debt, they can also buy their own stock, and they can buy up to 44 million shares if they think their stock is ridiculously undervalued, which I do believe it still is. The program does not obligate Occidental to acquire any specific number of shares and may be discontinued at any time. The board can make a resolution like that, and then that plan is gone. Signatures. All right. So I'm going to wrap it up with this. I just wanted to show you this. So right at the end of the 10Q, you can actually see the long-term incentive plans. And the reason why I wanted to share this with you as well is because the largest part of Vicky's remuneration as CEO is actually restricted stock units. And most of those restricted stock units are earned performance shares, and it relates to target performance shares in terms of not only the company, but also the stock reaching a certain level of performance before she can actually get her grubby little paws on those stock awards, those stock incentive awards. The performance goal, this is the last one, guys, for the performance period is based on the relative total shareholder return. It's commonly called TSR, total shareholder return, of the peer companies. Who are the peer companies? They're just here below. They are BP, Chevron, ConocoPhillips, EOG Resources, ExxonMobil, Royal Dutch Shell, Total, plus the S&P 500 index. And then there's it gives you a description on how the TSR is calculated. So guys, that's kind of a flyover of the 10Q. And even though I went through it quite quickly, I didn't miss a lot. Now, I'm sure there might be some questions that you have related to the 10Q. Of course, you can just look at the 10Q because it's a public filing. Otherwise, if you want to chat in the group and pose some questions, there are a lot of people on our group that are much, much smarter than what I am that could probably answer any questions that you may have. I'm going to try and keep up as best I can. Today is Thursday. Tomorrow, I'm off to Orlando for the weekend. I'm only going to be back on Monday next week. So I will be checking in. Obviously, I have my mobile with me, my trusty little handheld computer. So I will be checking in and seeing what's going on. But if I don't respond in a timely fashion, forgive me, because I am going to be hitting the road. So on that happy note, even though we see Oxy giving back a lot of its gain again today, stay healthy, stay away from COVID, be patient with me, and we'll talk to you soon. Thanks for watching. Bye-bye.